This video will discuss the last two steps used to prepare the statement of cash flows. Step 2 focuses on the cash flows from investing and financing activities, and Step 3 compares the net change in cash. In this course, we focus on the indirect method, but it is important to note that Step 2 and 3 will be the same under either method. In Step 2, we need to analyze changes in non-current or long-term asset and liability accounts, as well as stockholders' equity accounts. And we need to record it as either investing or financing activities, or disclose it as a non-cash transaction. For the investing activities section, look at changes in long-term assets, such as land, building, and equipment. Computer Services purchased land for $110,000 by exchanging bonds. The exchange of bonds for land has no effect on cash, but it is a significant non-cash investing and financing activity that needs to be disclosed. The equipment account increased $17,000. The additional information explains that there was a net increase that resulted from two transactions. One, we purchased equipment for $25,000, and we also sold equipment for $4,000. These transactions are both investing activities. The company should report each transaction separately. So it would report the purchase of equipment as an outflow of cash for $25,000 and the sale of the equipment as an inflow for $4,000. Lastly, the company purchased a building for $120,000, and we would show that as a cash outflow. For the financing activities section, look for changes in long-term liabilities and stockholders' equity accounts. We know that the company acquired land by exchanging bonds, and we've already identified this as a non-cash transaction. We also know that common stock increased by $20,000. And if we look to the additional information section, we know that they issued additional shares of stock. So again, we're going to show that as a cash inflow. We also know that retained earnings increased by $116,000 during the year. The increase can be explained by two factors. We had net income of $145,000 and dividends of $29,000. Payments of the dividends is a cash outflow that the company reports as a financing activity. Then the last thing I just want to conclude is that when we are preparing that investing and financing activity section, positive numbers indicate cash inflows, whereas a negative number indicates a cash outflow or a payment. Right, so here's a partial statement, and again, the focus is on the investing and financing activities, and you can see the purchase of the building and the equipment are negative or outflows, whereas the sale or the proceeds from the selling of their equipment is an inflow or it's a positive number. Issuing common stock, again, that's showing as a positive number because it's an inflow, whereas the payment of cash dividends, we're going to show that as a negative number, which represents an outflow. And then the last thing I just want to mention is you can see that non-cash, that significant non-cash investing and financing activity. Again, it's not part of the body of the statement of cash flow, but rather we're going to disclose that at the bottom or in a separate note. The statement of cash flows for Computer Services reports the cash receipts and cash payments from operating, investing, and financing activities during a period. Again, if we look at this statement, we can see that this company generated $172,000 from its operating activities. We also can see that they used $141,000 to invest in equipment and building. And then we also can see that they used $9,000 in financing activities. Again, if you add the sum of the net cash provided by operating, investing, and financing, they will equal that net increase of $22,000. If you add that to the cash at the beginning of the period, you'll arrive at the cash at the end of the period. The last step is we want to compare the change in cash on the statement of cash flows with the change in the cash account reported on the balance sheet to make sure the two amounts agree. The net change in cash during the period was an increase of $22,000, and as you can see, this agrees with the change in cash that was reported on the balance sheet.